Hello everyone, this is Paul from the APNacademy, and in today's video we're going to be looking at M and W shapes, or what people call M and W patterns. Now these patterns are very, very important if you understand them, because they do function in every type of market that you'd like to trade, whether you want to trade Forex, whether you want to trade stocks, whether you want to trade cryptocurrencies, the spot trading of cryptocurrencies, commodities, any type of market that you'd like to trade. They apply there. You just have to understand them, what they are, the rules, how they're applied, and how they are formed, and everything will be smooth. So as usual, before we go deep into the video, we are going to be starting with the theory part. After us understanding the theory, then we shall go to the chart. Hope we're together. Usually we start with the theory so that we explain into detail and you understand what we're talking about, what the topic is about. And then we shall go to the chart and do the practical or the practice of what we have just studied. So what are we going to be studying today under the M and W shapes or patterns? We're going to be looking at what they are. That is one. Then two, we're going to be looking at the types of M's and W's. And then we're going to be looking at the uses of those M's and W's and the time frames in which we use them. Because if an M or a W appears in a bigger time frame, or what we call your analysis time frame, all of us have different analysis time frames that we are comfortable with. So we're going to be looking at, if those shapes or patterns happen in a certain time frame, what do we use them for? How do we use them? And then if they happen in our entry time frames, how do we use them? That's what we're going to be talking about. And then we shall also look at the rules of how we trade them, because they do have rules which most people don't understand. Someone will just tell you, I saw an M, I'm going to take a trade. Maybe it's a sell. I saw a W, I'm going to take a buy. That's not how we apply them. Are we together? So without wasting time, let's just go into the details. So let's first start with what these structures or shapes are. These are simply M's and W's. These are simply structures being created by the market that just look like the alphabetical letters. That's why they're named after those letters. But here's a disclaimer. If someone says that the market has made an M, they don't mean that this is the M, right? Most people are taking this to be M or this to be a W. This in the market concept is not a W. It can be a W on the alphabetical charts or in the alphabetical letters, but in the markets, this is not an M and this is not a W. We're going to be looking at that just in a short while. But for now, let's first define them. And we have just said that these are movements or structures being created by price in the market to emulate letters M and W. Emulating means that they look like and they are like those letters, but how to use them and how we treat them on the chart and how price behaves with them on the chart is different. And also how the shape that we're considering in the market is not exactly this, right? We're going to be looking at what we mean by the M and W in the market. Are we together? Let me just repeat this. These are structures that the price creates when it is moving, and it emulates the letters of M and W, which are on the alphabetical charts. That's why they're named after those letters, M's and W's. What do I mean by that? We mean that if the market is making higher highs, it makes a high, it makes a low, it makes a higher high, right? It makes a higher high like that, and then makes this low, then makes a higher high here, comes back to make a higher low. Now, when the market fails to make a new high and instead stops on the same level of the previous high and then breaks down, we say that it has made an M. Why are we saying that it has made an M? Because it's emulating, or it looks like the letter of the alphabet, this one here. It looks like an M. But on the alphabetical chart, even if you write your M like this is still an M. We're together. Even if you write your W, right, like this, even if you write your W like this is still a W. But on the charts, we have certain things that we follow, and the certain things that the price has to fulfill before we say that this is an M, right? So having understood that, let's go to the next thing. Let's look at the types of both the M's and the W's. Now, I'm just going to split my screen here. This is the side of the M. This is the side of the W. I just want you guys to see how I'm drawing my W even before the W and M, before even we reach that part. Now, the first type of M that we have is the most common one, which is what people call the double top. You see, the market makes a high, market moves up, turns from here, makes a turning point, comes down, makes a turning point, right? And then goes up, fails to clear this previous turning point. Remember that an M is created in an uptrend. Let's just mention this. It's created in an uptrend, while this one is created while the market is making a down trend. So when the market is making an uptrend, we expect the market to be making higher highs and higher lows, higher highs and higher lows. While the downtrend, we expect the market to be making lower lows and lower highs, lower lows and lower highs, like this. But the moment the market comes and fails to take out this previous high and instead stops here and then moves down, this is what we call an M, and it's the first type of the M that we do have. Now, the second type of M that we do have is this. The second one is when the market makes a high, makes a turning point here, comes down, makes a turning point, and then it goes up, but it even fails to reach that previous high and turns from around here, just below the previous high. I see. This one is sometimes called the double top. Let me just repeat. While this one is the second type of M with a lower high. This one has equal highs. The first one, which people call the double tops, it has equal highs, while this one has a lower high. It has this high here and a lower high, right? It will be having a higher high because the market is going up, and then it makes a lower high. Then the third type of M, this is C. The third type of M, the market makes a high, makes a lower high, a higher low, sorry, then makes a higher high, right? Makes a higher high, and then breaks down, breaks all this, breaks this turning point, and also breaks this turning point. These are the three types of M's that we do have. And also the W's is just the opposite. But let me just redraw them clearly for you so that you can understand them. The first one is the market creates a high, creates a turning point, which is a higher low, creates the same level of highs, right? And then breaks down to create an M. You're getting it? Then we say the second one is the market makes a high, makes a low, makes a lower high, and then breaks down. Right together. The third one is the market makes a high, makes a low, makes a higher high, then breaks down all these turning points here. Are you seeing? So this is the first one that we have. This is the second one. This is the third one. And for the W is also just the opposite. Let's look at the W. The first W that we create, or the market creates, is the market makes a low, makes this high, a lower high, then fails to take out this previous low it had created, and then breaks up. Are we together? Then also the second one is just the opposite. The market makes a low, this turning point. Are we together? It makes this turning point here, creates a lower high. Then instead of even reaching here, at least to create equal lows, it instead creates what we call a higher low and then goes up. I just want you guys to be keen on how I'm drawing these things. Are you seeing this? There's a part in the middle that this turning point in the middle, which people call, or what we call the neckline, that I am making sure the price crosses, right? This price movement crosses. And that's how a valid M or W should be. But we're going to get into that shortly. Then the third one is the market makes a low, makes a lower high, makes a lower low, and then breaks all these turning points to create a W. Just notice that I'm breaking this middle part, this middle turning point, what we call a neckline. So these are the three types of shapes. So the three types of M's and W's. We first looked at the M, then right now we have looked at the W. I hope we're following. In case you're lost, before even we go to the practical bit, please let us know, or let me know in the comment section, so that I can be able to pick you up. I'll be able to answer you, whatever you ask, right? Because these shapes or structures or patterns are very, very important. And they give at least a very high rate of accuracy if you understand them, right? So now let's go to the next thing. Let's go to the next thing. Let's go to the next thing. Now, the next one is, I want us to look at the uses of the M's and the W's. Now, remember when we're starting, I told you that when an M forms in an analysis time frame, it has a different use. And also when it forms in an entry time frame, it has a different use. Now, let's just generalize the uses and then we shall split them just in a short while. Now, the first one is it identifies change in trend. What do I mean by change in trend? And this is a very big factor for most traders, and they don't understand. That's why people, the 95% are the majority of people losing money, while only the few ones who are in the 5%. Personally, I believe this percentage is bigger. Personally, on my personal understanding, I believe this percentage is high. I believe about 98% lose money in the market and only 2% make money. But that's my personal opinion. Now, I was saying that most traders just think that if I have my resistance here or my order block, whatever you call it, or supply and demand zone, let's say I have my supply level here, the market moves up, 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 reaches here. As soon as I get, let's say, a bearish engulfing or an evening star, I'm going to take a sell. This is not right. The market has to show you that I have moved or I am tired of making an upward movement. And what are the characteristics of making an upward movement? For example, I'm just giving an example. I'm explaining this point of change of trend. If the market is making higher highs and higher lows, the market should communicate to me that I am no longer interested in making higher highs and higher lows, but I'm instead rather interested in making lower lows and lower highs. This is what we call a change in trend. I will give you a practical example. If you're driving on a highway, a big road, in a layman's language, let me call it a big road, a main road. I don't know how you call it wherever you are. It can be a highway, it can be a main road, it can be a big road, as long as you understand it. And you would like to turn to a smaller road, which leads you, let's say, to your house. The speed you've been using on the highway or the main road or the big road is not the same speed you're going to use when you're making that corner. You have to reduce a bit and then you change direction to go into that. That's why even the market, if it is moving higher highs and higher lows and higher highs and higher lows, it will reach somewhere, it will decelerate to try to change trend. That's one of the characteristics of change of trend. Alternatively, even when it is coming down, right? When it is tired of moving downwards, it will decelerate and then it will change trend. The market always communicates, but we as traders, we tend to ignore the communication the market is giving us. So these M's and W's contribute to this deceleration here. We have decelerations happening in the market, and these shapes or these patterns contribute to that factor of decelerating the price speed. Now, the second use, it gives us the area of interest, what we call area of value. Now, M's and W's do give us area of interest or area of value. What do I mean by that? Before you take a trade, before even you think about saying that I'm going to buy, or you make a decision to even start picking an interest in a certain pair or commodity that you want to trade, or cryptocurrency or stock that you want to trade, you need to get interested in that particular pair. And what makes you interested? There are certain things that you look out for. And one of them is an M, or you can use a W. So they give us areas of interest. And I'm going to be showing you just shortly on that M and W, where is the interest of, where is the area of value, or what we call area of interest. Are we together? So then another one is it determines targets and invalidation areas, or you can call them take profit areas and stop loss areas. We're also going to be looking at that briefly. Now, let's continue. The next thing I would like us to talk about is how these M's are formed. And this is where I'm going to be talking about the area of interest and the area of interest or the area of value, and how they give us targets and areas of invalidation. Now, I just briefly spoke about this. In an uptrend, that's why we said we form an M in an uptrend, and we said in a downtrend is when we form a W. Are we together? Now, when the market is moving up, what are we expecting? We're expecting a high, a low. The market prints a higher high. We break, of course, this previous turning point. When the previous turning point is broken, we expect a retest of this previous broken place. But there's a disclaimer here. Sometimes the market may not come exactly here because of the way the price breaks here. Sometimes if the price is very impulsive, it may not reach here. It may stop somewhere. We're going to be looking at that also. There's a full topic about that. Just make sure if you're new, make sure you subscribe so that you don't miss out the content that will be coming on later on, right? And if you're already subscribed, make sure you turn on the notification bell so that you don't miss out anything. These are things that most traders are not aware of, right? Some people think that if the market breaks out, it's a must. I need to get a retest exactly to this level. But sometimes, I'm sure you've experienced this, sometimes the market does not even reach here. It just stops somewhere and then continues up. So we are going to have a video about this. Make sure you do not miss it. Now, after retesting here, of course, in a normal market, this is a normal market, besides that disclaimer I've given. Now we expect the market again to break up, right? Now when the market breaks up, it creates a new high. Here the market is creating a high, higher high, higher high, right? Now the market creates this turning point. The moment the market fails, the market comes back and retests here as usual. We're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We expect this to continue. Now, the moment the market fails to break this area here, that's the first communication to you that the price is making, that I am tired. I'm no longer interested in continuing up. Are we following, guys? If I'm very fast, you can just slow down the video, or you can just always go back and then you listen carefully. If you understand this topic, you're going to see your trading is going to be different. And I'm going to show you on the chart, and it's very easy even to identify them. Some people say that identifying them is hard. Here, it's very easy when you're talking about them, but when you go to the chart, it's very difficult. Don't worry. We're doing theory to first understand, and then we go to the chart. Now, the moment the market fails to break here, and then comes down. Now, this is the part I was talking about. When price comes and stops here, most traders think that this is an M. This is not yet an M, right? This is not yet an M. Let me just repeat that. Let me just repeat that for someone who missed it. In case I'm very fast, please slow it down, just in your settings, or you can always go back and re-listen. Let me just repeat this part. This is where most traders go wrong. When the trader sees that there's a turning point here, and the market comes and turns from here, what are they seeing? They're seeing I have a double top here, right? The first type of M that we talked about is forming. But remember, this is not yet an M, as we're going to be looking at the rules. This is not yet an M. It only becomes an M when price breaks this point. Who can guess why? Who can guess why? Let me just give you 3 seconds to guess. 1, 2, 3. Let me now answer it, and you mark yourself if you got it. Now, remember we talked about turning points in one of our previous videos. Guys, our videos are related because we're not teaching you strategies. We're teaching you exactly how price moves. So if you understand price movement, you don't need anything like strategies, or you just need to have rules. You need to have rules. Focus on rules and what works for you, and not strategies. If you focus on strategies, your journey of being consistent is very, very far. So the rule is the price has to break down. Why? Because in one of our videos, we say that these turning points are acting as support and resistance, or areas of demand and supply. So remember, when price turns from here, this is automatically support. When it turns from here, it's automatically resistance. Now, for it to be an M, we need to break this support so that we know that we are going down. Where most traders go wrong is when the price forms this, they instead sell from here. Remember, we're saying this forms in an uptrend. So when an M is created, we expect the market to give us a sell. And this one forms in a downtrend. And when it is created, we expect the market to give us buying. So we are supposed to start thinking of taking buys. But we don't just take buys because we have seen them. For example, like here, what I'm explaining. Most traders are selling at this point, and yet the market is hitting a level of support. When you sell from this area here or near it, the market can easily reject and makes a W. Are you seeing? What was almost looking like an M now becomes a W. Do you see this? And most traders are a victim of this. Let me just repeat that. The moment a turning point is not broken, even if you've seen double tops or double bottoms, in the case of a W, as we're going to look at, that is not yet a shape, or it's not yet an M or W pattern. You're going to get trapped. That's why most of you are losing money in that process, and you're saying that these things don't work. M's and W's are not working. They are working, but you don't understand their rules. So you have to wait for this turning point to be broken. Why? Because this turning point is acting as a strong level of support, in this case of an M, right? So once it is broken, then you can say that you have an M. Of course, we're going to be looking at the rules whereby we expect it to come back and retest this area here before continuing down, right? So this is how an M is formed, the first type, but the second type and the third type are just the same as we're going to be looking at. Let me just show you briefly. That's the first one. The second one, higher high, higher low, higher high, higher low, higher high, higher low. Then when the market, after retesting here, retesting this previous higher high, we expect the market to make a new high, right? But the moment it fails to make this new high, let me just remove this. The moment it fails to make that new high and instead comes and even stops here, even failing to attain the same level of the previous high, and instead just stops here, this becomes what we call a lower high, while this one is a higher high. So this is the second type of M that we talked about, and price should break this turning point, guys. The moment it's not broken, it can easily stop here and then it makes a W. Most traders are falling victims of this. These turning points, please, if you've not watched that video of support and resistance, just go and watch it. It's a very detailed explanation. Watch it so that you understand the importance of turning points and how you can mark them. The moment this turning point, once again, the moment this turning point is not broken, it can easily become a W. It should be broken for it to be an M. So this is the second type of M. Now let's go to the third one. Now the third one, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And then the market makes a new high by breaking this, makes a new high. But instead of coming to retest it, it breaks. And instead of even stopping here, guys, if the market, instead of stopping here, it can also break, or it can come and retest here and then breaks. But this becomes a different shape, a head and shoulder. We have also a video on that. We're going to talk about it later on. But right now we're talking about M's and W's. So let me just explain the part of the M. So the market breaks here and also breaks here. So this becomes the last type of the M that we talked about, which creates a higher high here plus a new higher high, making it this last type of M with a higher high, and then breaks all these levels. Of course, after that, we expect the market to come and retest here and then continue down. We're going to just look at the rules shortly. This is it for the M's, the three types of M's, how they're formed. Now let's look at how the W's are formed, just the opposite. Remember, W's, we have said they're giving us the perception that we're supposed to start looking for buys, and also they are formed in a downtrend, when a downtrend is coming to an end, right? So the market is making lower low, lower high, lower low, lower high, lower low, lower high. Then the market fails to take out this previous turning point here, makes this lower high, of course, is retesting this previous turning point here, comes down, fails to take out this previous low, which is a turning point. Turning points are very key. Then it comes and breaks here. The moment it is here, please don't take it. Please, guys, do not get involved in the market or with price when it is still here. It can easily turn to become an M, because this turning point here can hold price still, right? So in case it has not taken out that level, do not get involved with it. It should first take out this turning point. Are we together? So the moment the price breaks it, now you've created a W. Are we together? This is the first type of W that we have. Now let's look at the second one. Now the second one is when the market is making lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now the market comes, retests here, right? And then it has created a turning point here, of course. Now when the moment comes and fails to even equate or to make same levels with this is what we call a higher low. The market, instead of making lower lows or equal lows even, it's now making a higher low. Now, when the market starts moving up, remember, this is now resistance, this is support. We need the resistance to be broken for it to be a W. The moment it's not broken, it can easily stop here and then makes an M. It means that it has just retested this level 2 times. Most traders are falling victims of this. I'm over repeating this. It should not sound monotonous, but I'm just trying to emphasize a point that most people or traders are falling victims of. Do not be a victim of this. Now let's go to the last type of W. We have lower low, lower high, lower low, lower high, lower low, lower high. The market creates this turning point and creates a low, right? It creates a low. This is a turning point. It creates a low, right? Then remember this a turning point first created this low. It created this low here and then created this low, created the lower high, created the low, a new low, right? Now we expect the market to come and retest it and then it continues down, right? But instead, if it breaks it, right, and then comes here, and also this level, if this level holds it, now we know that the next target is this turning point. If this price, this level holds it, it can come retest here, then it can either go up or continues down. Are we together? So you have to be keen with this last type. So the best way is when the market retests here and then goes up, but this becomes a different shape. It becomes an inverse head and shoulder. We're just going to talk about head and shoulders in a different video. But today we're focusing on M's and W's. Now, the best one is when it breaks up so that it gives you this M with a lower, sorry, this W here with a lower low. And this was our last type or the third type of W's. Are we together? So this is how they are formed. And just a recap, M formed in an uptrend. And then W formed in a downtrend. This one is indicating that we should start thinking of looking for sells, while this one is telling us that we should start thinking of considering buys. But just look at how I am drawing the W's. This neckline, this turning point should be broken. The moment it's not broken, it's not an M and it's not a W, it's something different. But of course, something like this can be an M on your alphabetical chart. It's okay. But in the market, it's not. This is not an M. That's why we, in the definition, we just say they emulate the letters M and W. They look like them, but there are rules to them qualifying to be M's and W's in the market language. So that's how they are formed. And once again, if you're finding value in this video, do not forget to like. And if you're new, do not forget to subscribe so that you can get such videos with a lot of information in them, which can improve your trading. Now let's go to the next thing that we're supposed to cover today. And that is the rules of trading these M's. This is the last thing that we're going to be looking at. And before I talk about the last thing that we're going to be looking at, let's just do a small recap. We first talked about what M's and W's are. And we said these are structures created by, as a result of price movement that emulate letters M and W on the charts. Then we talked about the types of the M's and W's. We have three types on each side. One which creates double top, or the other creates a double bottom, then the other that creates a lower high, and the other that creates a lower low or a higher high before creating the structures. Then we also looked at the uses of these M's and W's, and we say they create levels of interest, and also they create change in trend, and also they create targets and invalidation areas. And also, as we have seen, the turning points are creating levels of support and resistance, which is area of interest or area of entry, depending on the time frames that are formed in, right? Here, they can create area of, here you can just add, they can create area of value interest or area of entry. It can be also area of entry, depending on the time frame. If it has been created in a time frame of entry, it's creating for you an area of entry. If it has been created in a bigger time frame or analysis time frame, it's giving you area of interest. And when we talked about how they are formed, what we've just spoken about, the moment the market, in an uptrend, we expect the market to continue making higher highs and higher lows, while in a downtrend, we expect the market to be making lower lows and lower highs. The moment that one fails to be fulfilled and it's broken, in most cases, that's the scenario in which these shapes or patterns of M and W are being created. The third one there is head and shoulders and inverse head and shoulders, but we're going to talk about that separately. That's how these shapes or patterns are formed. Now let's look at the rules of trading them, right? The rules are the same. We're just going to talk extensively about one, then the other we shall just go through it quickly for the purpose of making the video short. Now let's start with the double top. Well, I'm going to use the double top. Let's assume it has already been created, because we know now how it's created. The market is making higher highs and higher lows. Now let's assume it has been created already. And the market is here. Please also, where the price is matters. Because not all the time you're going to be on the chart looking at it, these structures forming, right? So it means that you have to know where you found the price. Let me just clear this. And I'm assuming it has been created already, now that we know how it has been created. So I'm assuming the first time we weren't on the chart, but we came and found the price has already broken this turning point and has created this. Now, if this is in an analysis time frame, I'm meaning your time frame for doing analysis, or the big time frames. It can be weekly, it can be daily, it can be monthly. But remember, monthly, we said it in our video of time frames, its uses for direction. We don't do anything in that time frame. Please, monthly, you don't do anything there. You can draw your levels, but its use is just simply direction. Now, if this is your analysis time frame, let's say daily, most of us are intraday traders. I'm going to use daily. Now, if this is daily and this turning point has been broken, I will, and we are here. This is our point X, right? We are here. You've opened your chart and your daily time frame, there's an M. You now know what qualifies an M. It has broken this. It made double tops, equal highs here, and it is here. You're at point X. What is the rule? The first rule that we have been talking about is we need the neckline. Neckline must be broken. Let me just type it. Let me just type it here. Neckline must be broken, right? Then 2, we need a retest. There should be a retest to the neckline. Now, why do we need a retest to the neckline? I've just explained that. I've just explained this. These turning points, remember, are acting as levels of support and resistance, so areas of supply and demand. Now, the moment the area of demand is broken, it becomes an area of supply. Or the moment support is broken, it becomes a resistance. So once a resistance or support is broken, we expect a retest. What we mean by a retest, we expect price to come back to this area. That's what we're calling a retest. Now, that is the rule, the number 2 rule of trading the M's and W patterns, or the M and W shapes. 1, we expect the neckline to be broken. This is what I'm calling a neckline, that middle turning point. 1. 2, there should be a retest to the neckline, right? Unless this is a normal market condition, unless we have the abnormal market condition whereby the market is making an impulsive move, what we call an aggressive move. We also have a whole video on that, right? So just make sure your notifications are on and you're subscribed. You will have all this information, right? So unless the market is creating an impulsive move, but if it's this normal market, we expect the market to come back and retest the neckline. That is rule number 2. Now let's go to rule number 3. After the retest of, sorry, let me just put this here. So after the retest, what do we need? We need either for an M, but I'm going to just generalize them. Okay, let's just use an M. We need either a lower low, comma, we need either equal lows to be created, or a higher low. What do I mean by this third point? If this neckline is broken, that's the first one. Let me just use something that you can see. If this neckline is broken, this is the breaking, and you're here, we're at point X. One thing that you need to expect is the market should retest this broken level. Why? Because a previous support and has now become resistance. We need it to be retested. Then we are saying on the third one is that, we need, let me just move this here where you can see it. The first one, we say that we need the neckline, this neckline here, to be broken, and then there should be a retest to the neckline. I've given you reasons why we need a retest to the neckline. Then the third one is we need either a lower low, equal lows, or a higher low for the case of an M. What do I mean by that? We mean that the market should either come and give us equal bottom, meaning that this is giving you your target. This will be your target, your first target, right? It's giving us target. Remember, we said it determines targets and invalidation areas. So this will be your first target. Or the second, can create a lower low. It can, meaning it can continue down. It can also break this, because This is now a resistance, that meaning it has made a low, made a lower high, so it can continue to make a lower low, right? Then that's the second one. Then we're also saying that it can also alternatively, after retesting here, we can also create what we call a higher low, meaning it can stop up here slightly above making equal lows, and then it continues up. These are the rules of trading an M. The moment you see that, it means the rules have been fulfilled, right? But now the question is, where do we take our trades from? The areas of entry, right? Remember, this is a big time frame. We're using it in big time frame daily. So we're just identifying areas of interest. Now I'm assuming that this M has been created, let's say in entry time frame like H1 or H4. Now, if you're here, you can wait for change of trend. You can wait for the market to stop making lower lows and lower highs. And when it shifts away from making that, then you can take your trade from here. Now this becomes your area of entry as long as the change of trend has come in, and then you can take your trade back to the neckline because we're expecting it to retest the neckline. Remember the rules. First, the neckline is broken. Yes. Now you're here. What next do we expect? The second rule, to retest the neckline. Are we together? Now, once the neckline is retested, what other rule are we fulfilling? Either lower low or equal lows or a higher low. That's what the third rule is saying. But remember, in a smaller time frame, let's say H1 or H4, it's now not area of interest. It's area of entry. And what are we doing in area of entry? We're looking to take trades. And what are we doing in area of interest? We're looking for a change of trend so that we can take our trades after change of trend. And one of the things that creates change of trend are M's and W's. So that's why I say that the M's and W's are formed in different time frames and their uses are different. So the M that is created in a lower time frame for entry time frames, its use is different from the M that is created in a bigger time frame. Now, the M that is created in a bigger time frame is just giving you an area whereby you want to take your trade from, while the one created in a lower time frame is giving you the area you're going to take your trade from. I hope that one is sinking, right? Now, let's just do the one for a W. The rule is the same. I'm assuming the W has been created already. Okay, let's even assume now for this case, the market has already come here. It has already tested. Because you know that the rule is the moment this part is broken like this, we expect market to come and retest here, unless it's an impulsive market. I'm putting that as a disclaimer, guys. Unless it's an impulsive market. Now, when it's an impulsive market, there are certain rules that again we follow. But if it's a normal market, we expect a retest to this neckline here. And what next? The third rule comes in. We either expect equal highs here, because this is also a turning point, a price turn from, it becomes a resistance. Or we expect a lower high, right? Or we can also expect a higher high. These are the rules of M's and W's, guys. I hope we are together. If we are not and you're lost somewhere, just comment below. We shall be able to answer you and you understand them properly. These structures, these shapes or patterns are very, very, very profitable if you understand them. But the problem is most people are using them wrongly. Now, where do we take our entries from? Let's say this is our hourly time frames, hour 1 and hour 4. Where do we take our entries from? You can either take your entry from here, which is a bit risky. This is a very high risky area to take a trade from, this turning point here. The best place to take an entry from, this is one. You can take your entry from here if you're a high risk trader. Then the second one is after the retest of the neckline here with the proper change of trend, of course, with the rules that you look out for. This is the second and the most convenient part you can take your trade. Are we together? Someone I'm sure was asking, but where do we take our entry from? Like I mentioned earlier, I was still explaining the different time frames, the M's and W's forming and their uses, the different uses. Now, if this has formed in our entry time frame, one, the entry part you can consider is this first one here. The second you can consider is this other one at the neckline. And this is the favorite one for myself, because here you're not sure if it's going to either come and stop here or it's just turning to stop somewhere and then continues down. But once it breaks here, you at least have you're having most of the confluences coming up together. We need now just a retest here. And then once the change of trend, you can take your trade. Are we together? So the rules are just the same, but of course the shapes are different. the shapes are just the opposite of the other, and they do different things. So this is the theory. Now let's just go to the chart briefly, and then we see, or we apply whatever that we have spoken about. And is it true that the market actually forms these structures? Let's just go to the charts, and then we see if these things are applicable there on the charts. Okay, so let's use an example of AUD card on a real chart. The other one was just theory. Now, I would just like to put across something to you guys. You can see the chart is not as smooth as how we're drawing higher high, higher low, higher high, higher low, higher high, or how we're drawing lower low, lower high, lower low, lower high, lower low, lower high, right? So that's not how the chart moves. The chart actually moves with imperfections. You can see lower low, lower high, but it created double tops here, and then again created a low. Then came back to the same level here, and then created another low. So the market is not going to move as smooth as we started there, but that is just for illustration purposes. For example, here, market created a low, came up, created equal lows, came up, equal highs, then made a new low, then created a lower high like that, created equal lows, lower high, equal lows, lower high, and then dropped. But all in all, it's creating lows, right? So you just have to identify what we call the swing lows as the market is continuing down, right? So that's one. Then two, if the market creates an M, it's not a must that you're supposed to take the trade from exactly here. Sometimes it may give you room for change of trend, and then it drops down, or it may even exceed, or it can even break it. It's not a must that every trade is supposed to be a winner, right? But as long as you're following the rules, you're always going to have more wins than the losses. Always keep that in your mind, right? So I would like us to pick any part of the chart. Let's start from here. I've liked this M here. The market created a very nice M for us here, this big M. So after this big M, we expected the retracement and then a low. So that is the first one that I've identified. Let's just see how the market behaved there, right? I've just picked a random place. Let's start from here and we go the other side. Let's see how the market behaved here. So let's pick from here. Then we see. So the market first created for us a high, then a low, then a high, right? So for us to have an M, we need this level to be broken, which is already broken, but also we need this other level to be broken, right? So let's see if really the market did that for us. Let's see if the market did that for us. So let me just play. Let me just play. We are saying that we need this level to be broken so that it gives us a low, right? So this is the first time the market is going below it, but it's not sufficient enough. We need at least the market to show us that it has a momentum down, right? This momentum is not enough. So let's continue and we see. It gave us the momentum here. Now, after this M has been created, this M, let's now use the rules. We said first and foremost, this neckline should be broken. Then we need a retest, right? Then we need a retest to this neckline. For example, we need the market to come back and then creates either a lower low or creates double bottoms or a higher low. Of course, the issue of risk to reward ratio comes in here, but this is not the purpose of the video today. We're just learning the rules and how the M and W patterns operate. So let's continue. Let's see how it came out. Really, did it come to the neckline? And after the neckline, what did it do? So let's continue, right? You can see the market came back to the neckline, right? So it fulfills the other rule. Let's see, what did it do next? 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 It created a low. I see. M created, neckline broken, low created, right? So let's look for more patterns. Let's look for more patterns, right? Now, again, in the process of creating this low here, but this is the same movement, right? Someone may say that in the process of creating this, again, it gave us an M. I usually don't advise you trade this because this is the same move. It gave us this bigger M. We tested it, so we're making a low. So this pattern here is done. What you do is you wait for another one. So let's look for another structure if in case it was given to us. Remember, we're looking for M's and W's. So let's look for another one. Oh, there's one we just missed here. The market gave us this neckline area and it broke it, and then it went back to retest it. Are you seeing here? It broke it and then went back to retest it. Let me just show you guys here. Here. There. Are you guys seeing here? You guys seeing this? Let me just clear this chart here. The market broke below here. So we needed the market, it clearly broke down, right? So we needed it to retest this area and then creates for us a low. Let's see if the market did that. It exactly went and filled it in and then continued down. Let's see. Yeah, so it gave us the nice risk to reward ratio that we needed and it played out. But this was a small one. I don't know if we go to the smaller time frame to give the risk reward ratio. Let's try to look for a W. For a case of a W, the market continued down. Let's see if the market gave us a W somewhere. So also the market came and gave you a turning point here, right? So the market crosses it. Let's see if the momentum was a bit strong upwards. It gives you a strong momentum upwards. So after a momentum is given to you, a W is given. What do you want? You want the market to come back to the neckline to fulfill that rule. Then we have a push up. So let's see. Let's see. So far we got this one, then we got this one. So let's see how it plays out. Let's see how it plays out. We need a retest to the neckline. We need a retest. Need a retest to the neckline. This one slightly missed our neckline area. Of course, we would have made it big like this, but this is not appropriate. So this missed our entry. We didn't have an entry here, right? We didn't have an entry, no trade, right? So let's continue and look for another pattern. But you can see it came back to retest still and then pushed up. Now, this was an impulse. Remember, we said that sometimes we're going to have a situation of an impulse and the market will come down, but it will not fill your orders, right? Let me just clear this. Now, let's continue. Let's continue. We'll look for another structure. Let's look for another structure. Let's look for another structure. Let's look for another structure. Okay, the market creates a neckline area here. Let's see if it fills it for us. Let's see if it fills it for us. Let's see, the momentum is downwards. Let's see if it gives us a retest back there. It does give us a retest, right? So the market gave you this M here, right? And then the neckline was broken out. A retest was done. So what do we expect? Either double bottom, higher low, or a lower low. Remember, we're in a big time frame. So let's see what the market does for us. Let's see what the market does for us, guys. Okay. So let's see if it does that. Yes, it again fulfills, right? Are you guys seeing? So this movement is done. Let's look for another pattern, either W or an M, either W or an M. But also as we're doing this, you can look at the types of Ws that are being formed, right? The market continued pushing down, Okay. This is not a nice situation to trade in, right? Because the market was consolidating. Avoid such market situations. So let's just continue. Let's continue. Of course, the market created a structure here. So if you wanted to take a risk on this, this would be your structure here. Because if you go to the line chart, you'll see that there was the market came down, went up, came down, went up. So it created an ugly W here, but this, all in all, there's a structure that was broken here. So we can need the market to retest it, then it gives us a push up, right? So let's see if the market actually gives us that retest. It doesn't. The market just kept going up. So actually, it's better just to would have just avoided it because it was not a clear one, but a structure was taken out and we needed it to be retested. Resistance area, because the market was failing to break it after broke it, but it didn't fill it in, right? So we don't chase trade. So far, we have missed out on 2 entries because the market didn't fill us in. Here it missed us a bit. So we have 1, 2, 3 wins and then 2 no trades taken, right? But this is, we're not here to take trades or to see how many times we win. We're here to see actually if the rules are being fulfilled. Are we together? We're just here to see. That's why I'm not putting the entries and all that. We're just here to see if the rules are being fulfilled. So this is for a bigger time frame, right? This is for a bigger time frame. Now let's see actually if also the same rules apply in smaller time frame. Remember we said that you can use these things in any time frame, right? So let's try to go to a smaller time frame, H1, I think. Then we see if really all these rules will apply there. Like I told you, I'm just picking a random place on the chart, and then we do these things together. So where should we pick? 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 Okay, let's start from here. I see what I like here. The market was making higher highs, higher lows. It was making higher high, higher low, higher high, higher low, higher high. Okay, that can be a nice one. So let's try to bring it in here. Let's start looking for shapes, right? Market was making higher high, higher lows. So let's try to look for structures. Created a W here. First, we needed the neckline to be tested here. This is H1. So here, this is your entry time frame, guys. Entry time frame. So every turning point or every neckline that's being created is your entry area. Of course, there are rules that we follow, but today we're not here for that. There are certain rules that we have to follow before we take trades, but today we're just learning about the rules. Remember, you have to know rules. Trading is all about rules, right? So let's see. You can clearly see W. If you cannot see the W, just go to line chart. You can clearly see that this was filled in and then we pushed up. So let's look for another structure. Let's look for another structure. Okay, the market is trying to create for us a structure here. So let's see if it will give us a neckline actually. So I will just mark this. Let's see if it will give us an M. It does give us an M, right? So it has given us a momentum down. Let's see if it goes back to retest it. It did come back to retest it, right? So let's see how the market behaves. Does it give us? Yes, it does. M given, neckline retested. Someone would have taken this, but I prefer the downer one. So neckline retested and we pushed down, we made a lower low, right? So let's see, let's look for another structure. Let's look for another structure. Let's look for another structure. Okay, so we had this one here, but it was not so nice, but it was a neckline area, so retested it properly and then pushed down. So let's look for another M. Of course, it's an entry time frame. The distances are going to be small. I'm just showing you. I'm not saying that this is how we take trades. Oh, we have another one created here. So this is a neckline area here, right? Let's see if the market comes back to fill us in, right? The market came back exactly to the neckline. Are you seeing that? So let's see how we continue. And it gave you a low. It gave you a push down, guys, right? So these rules apply. If you follow these rules, you are going to be profitable, highly profitable, as long as you're applying the rules, right? So that is it for today. And that's what I wanted to show you guys. I just want you guys to practice, use the rules. Do not just trade the ways that we discouraged when we're starting this video. You'll see your advantages in the market going up, guys, right? Do not ignore these rules. Use them correctly. They apply anywhere, no matter the type of market that you're trading. Are we together? So I wish you guys a great time. And if you're new, please do not forget to subscribe to our channel. We drop a lot of value on the channel. And if you've been watching us, do not forget to like. Have a great time.